Joining me now to break down the latest data is Art Hogan. He is the Chief Market Strategist at B. Riley Wealth Management. Art, welcome to NYSE Live.
Morning, Ashley. Thanks so much for having me. A lot to talk about today.
A lot to talk about this morning. President Trump nominated Kevin Warsh for Fed Chair to succeed Jerome Powell. How much does this move markets?
Well, I'll tell you this: the process of selecting the new Fed chair has been months and months in the coming, and Warsh was certainly in the top four candidates. So I think the market has had plenty of time to sort of price in the eventual decision. And I think that it's important to remember, agnostic to who the chair is, that it's a committee vote, right? So there's 12 voters. And while the chair's job is important to build consensus and certainly deliver the message of the path of monetary policy, you have to get votes. And we've seen in the last 3 or 4 Fed meetings, there's been dissenters. So the process is working. I think Kevin Warsh comes in with a history of being a bit hawkish, certainly in his tenure on the Fed and certainly around the great financial crisis. He was a noted hawk and proved to likely have been wrong at that point in time. I think he's got some flexibility in the fact that I think he likes the Trump policies with less regulation and believes in productivity with artificial intelligence will reduce inflation. So there's a bit of a balance here. We've got several months to go before he gets confirmed and takes the role. But I think the market certainly had plenty of time to assume that one of the last 4 candidates was going to be the next Fed chair. So I don't know that this is going to rock markets in the near term. And over the long term, it's important to remember the Fed was set up as a committee for a reason, and no one vote is going to shift monetary policy. So I think the market will see this as steady as they go.
And of course, speaking of steady, the Fed held interest rates steady on Wednesday. What were your takeaways from the decision and Fed Chair Powell's remarks after?
Yeah, it was a great press conference. I think Chair Powell's gotten better with every press conference, and he certainly had a lot of things to handle. Not the least of which was the importance of the independence of the Fed, which he was able to reiterate adroitly, and I think that's important. But I also think talking about the things that helped shape the decision, and the last 3 rate cuts were done in a fashion such to defend the full employment mandate, which was important at the time. But we don't have real-time data yet. There's still a lot of noise in the non-farm payroll data and certainly the CPIs and the PCEs that the government had to sort of fill in as the government was shut down for 40 days. So I think that as we move forward, into the deeper part of the first quarter, I think the real-time economic data will help drive the decision-making process at the Fed. There's no Fed rate cuts penciled into the Fed funds futures markets until the month of June. So I suspect that we're going to have a similar reaction in the next couple of Fed meetings where they don't do anything and talk about the fact that they're still trying to collect data to see if there's a balance between risk of inflation and certainly risk of a weaker labor market.
All right, and what does today's PPI data tell you about the state of inflation?
A couple things happened over the course of the last 24 hours. So the one is that the import-export numbers came in such that the Atlanta Fed, which tracks in real-time GDP, shifted downward the expectations for fourth quarter GDP from 5.2 to 4.5%. So that's reflective of perhaps that number being a bit too hot. I think on today's PPI coming in warmer than had been expected, that's going to part of that flows through to what the Fed looks at, which is the core PCE or personal consumption expenditure, and that likely is going to prove that inflation remains sticky. Now, I don't know that today's PPI will move that enough to cause much concern about inflation, but it just proves that the battle over inflation to get it towards or closer to the Fed's 2% target continues to drag on here. There hasn't been as much flow through from PPI to CPI over the course of the last 12 months, so this is not a shocking revelation. I just know that it's going to prove that the battle against inflation will continue well into this year.
All right, and the Fed's decision wasn't unanimous among policymakers. 2 governors dissented and wanted another quarter-point cut. What do you think these dissents tell us about the policy debate inside of the Fed?
Yeah, well, I think you have to look at the players, right? So one dissenter is this administration's nominee, Merrin, and he's been on auto cut, right? So whenever they meet, he dissents that if they cut, they're not cutting enough. If they don't cut, they should have cut. So he's been an automatic dissent to cut more aggressively, and then the other dissenter, Waller, was still interviewing for the job of chair. So I think his dissent was more performative. I think on balance, it's okay that there's not consensus, because there's really not consensus on what the Fed should be defending the most right now. Is their inflation mandate still on the front burner? And do we have enough information about the strength of the labor market to know whether or not we're really moving away from full employment? So I think the fact that there's active debate and discussion and dissents on the vote just proves that this committee format works, right? So to me, I think that proves out the point that this was set up as a committee for a reason, and we know that there's plenty of things that the Fed needs to discuss and to disseminate before they make any decision. And I think they did the right thing to take a pause, and will likely take a pause until the month of June.
Of course, this week we also saw more than half of Mag 7 companies report earnings. We heard from Meta, Microsoft, and Tesla on Wednesday, and Apple yesterday after the bell. What were your takeaways from the reports?
Yeah, it's interesting. So as it pertains to the names that are really directly tied to artificial intelligence, we've seen for the last several quarters, and certainly this quarter again, that investors' reaction tends to be, that's great that you're spending a lot of money. It's even better if it's coming from free cash flow and not from piling debt on your balance sheet. But it's also, you have to deliver to us some type of message as to when we will see a return on that invested capital. So in the case of Meta, investors have finally gotten to a place, this has been one of the worst performing of the Mag 7s, have finally got to a place where they say, yes, what you're spending is likely to increase ad spend and make some profit for you with the massive amount of capital you've invested. With Microsoft, that's still an open question. I think that's why we saw the massive drawdown in Microsoft in a quarter where they otherwise beat on all metrics, right? So they beat on the top and bottom line. They raised guidance, but investors are getting to that place where they want to show me the money moment, and Microsoft just doesn't have that yet with the artificial intelligence dream. And then Apple, I think, again, the sleeper of the bunch, right? Over on a 3-year stack, the worst performing of the Mag 7s is finally getting to a place where they've got three things going for them, right? So the demand for the latest iPhone, the 17, is massive and much further above expectations. The revenues that came out of China were spectacular, the best quarter they've ever had. But also the fact that they can now illustrate to you what artificial intelligence means to them, because they've made a deal with Gemini to help artificial intelligence be part of Apple Intelligence with that partnership. So I think Apple is it's the tortoise of the tortoise and hare race, and they're finally playing catch up here. And I think it's probably one of the best of the values in all of the Mag 7s right now.
All right. Thank you, Art Hogan, Chief Market Strategist at B. Riley Wealth Management, for joining us on NYSE Live.
Thank you.